Gold prices nudged higher on the open, but that's about as high as they got. We then saw them reverse lower, getting all the way down to 1712. So a bit of a reversal there, despite the fact that we do have a lot of key event risk this week. We did see yields moving a little bit higher. The dollar was kind of a non-event. It was basically trading near unchanged. So ultimately right now, gold kind of on its own little island here, as we saw gold prices rally into the weekend, and then they open up lower today. Again, the range, about a $20 range, 1712 up north of 1730, but ultimately we settled down by between 1720 and 715 in the post-afternoon trade. So ultimately, gold prices, like everything else, waiting for that next catalyst. Is it going to be the Fed? Is it going to be GDP? We've got some other central bank meetings next week, so clearly a lot on the calendar, and right now gold waiting and watching like many other asset classes. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility is nudging higher, mostly pricing in some event risk. Clearly, when the Fed speaks, gold moves. It's a dollar gold Fed move. They all hold hands, so it'll be interesting to see what happens. Clearly, the GDP numbers will play a part in what the Fed decides. And are we going into a recession? Are we in a recession, or are we going to avoid a recession? We should find that out Wednesday and Thursday based on what the Fed does and what the data tells us on Thursday. But gold will be watching, and it will be reacting not only to the Fed, but to the dollar. Lastly, let's talk about the positioning. What are those speculators doing? Well, they've been exiting their longs for quite some time. That's exactly what they did into last week. These CFTC numbers are only as of Tuesday of last week, so we missed a lot of the end of the week move, but ultimately they continue to exit those longs, either waiting for better prices to get in or looking for greener pastures. Obviously, gold not a yielding instrument, so as yields go higher, those may look more attractive than the shiny metal, at least for right now. And again, a lot of this is going to change when we get to the Fed meeting on Wednesday and GDP on Thursday. So opening up the week, gold prices moving up lower, holding near 1720 into the close today, ahead of FOMC and that all-important GDP number coming out the day after on Thursday.